Welcome to another video. Today we will be performing a live analysis in the market, both from a technical and an order flow perspective on a specific pair, so that by the end of the video we will see what kind of opportunity we can actually be looking for on that specific pair. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every single day. So I really do suggest that you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. Into this video, what we will be doing is speaking about GBP CAD. So I will be giving you a full update on the situation that currently we have, since the market just completed the pattern that we wanted the market to actually complete. So let's get straight in the video, and by the end of it, you will know exactly where is the best zone and what kind of opportunity we can be looking for on this pair. So let's get straight in the video, and as usual, I will keep it very educational. So starting here from the monthly time frame of GBP CAD, what we can see is that clearly the market has been testing an extremely strong level of structure. Now this level here was very strong structure all the way back here. In fact, from this level the market started all this huge move to the upside. Then again the market tested this zone here, acting as resistance, fake breakout to the upside, and then the market again respected this level as resistance here, again respected the level as resistance here, again respected it as resistance, and currently with the previous monthly candle the market has again once more respected this level as resistance and started this move to the downside. So on the monthly, situation is extremely clear. We have a market that has approached a strong resistance level and it has already rejected the zone to the downside. Let's go down on the weekly. Now, as you are seeing, I'm moving from the monthly, weekly, daily time frame when it comes to the direction. We will also check the order flow, and then we will go down on the 4 hours for the entry. So here on the monthly, situation is clear. We have a market that is at a strong resistance level, and we know that the market has created a fake breakout of this level here. Let's go down on the weekly. Here on the weekly time frame, situation is pretty clear. In fact, the retracement is coming exactly from the monthly resistance that we have already identified, and the pattern that we have here on the weekly is clearly an impulse, a correction, and you expect the next impulse to the upside at least to try to start. And what did we expect the market to actually make this move to the upside? Because, as we said earlier, that is the simplest pattern in the market. You have an impulse, you have a correction, and you expect the market to try to start a continuation to the upside. Specifically, if you want informations on this retracement, what do you have to do? You have to take your Fibonacci from the low to the high of the impulse. And by doing it, what you can see is that the market retraced exactly to the 50% of the Fibonacci taken on the impulse before starting this move to the upside. Specifically, if we go down on the daily time frame, what we can see. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or speak about in the next videos. On the daily, we can see that the market has already completed the pattern that we wanted the market to complete. In fact, what did we say in our previous analysis on this pair? We said that after the market had created this M formation, we wanted to see the market give us the move to the upside to complete the pattern, so the M formation at the neckline, aka the previous support, now turned resistance at this level. And that is exactly what the market has done. And I will link the previous analysis in which I show you that this is when the market was here. I told to all of you, expect this move to the upside. That is exactly what the market has now done. And I will link this previous analysis in description so you can go and check it out for further reference and for more free education, so you know all the reasons for which we wanted to see this move to the upside. And it's very important to say that we are actually also capitalizing on the strength of the pound on other GBP pairs, like for example GBP AUD. So we're capitalizing on this move to the upside. And this is just a general concept, okay? Every time that you have an information, you want to see the market make a move to the upside to complete the pattern at the previous support, now to resistance, which is the neckline of the M formation. And that is one of the reasons for which from here we wanted to see this move to the upside. We also had this candle here, which is the candle that the next one is supposed to fill in the wick. And we also had on the weekly, as we have just seen, the impulse, the correction, and we wanted to see the market at least try to start the move to the upside, meaning that on the weekly we had a bullish pattern and on the daily we had two bullish patterns. The candlestick that the next one is supposed to fill in the wick and the M formation. So clearly we wanted to see the move to the upside. Why we also wanted to see the move to the upside is because institutions clearly were adding longs on the pound. And this is also important to understand what we can expect next for this pair. In fact, if we go and get the order flow for the pound, so what the biggest banks and institutions were doing and are doing on the pound, we can see that with the last report, they added 6.6K long positions and closed 4K shorts. So can we expect the move to the upside if all the time frames from a technical perspective are bullish? And also, we clearly see that institutions are as well adding longs. Absolutely yes. That is exactly what we expected from this market, and that is exactly what the market is currently doing. And if we go and see what we have from a CAD perspective, we can see that with the last report, net positions decreased, meaning that institutions have shifted their positioning more to the negative side, so increasing the disparity between the shorts and their longs with 43K shorts and 19K longs. So clearly GBP CAD was expected to make this move to the upside. And can we expect more continuation to the upside? Now that is exactly what we have to understand, right? Because we have to understand where is the next opportunity for this pair. Now before we speak about that, it's very important to say that the next report, the next COT report is coming out today. So we still don't know what we will have with the new report, and it's quite important to know what we actually have, because we need to understand during this move to the upside what institutions have been doing. Have them been are they adding more longs on the pound, for example, or have they closed their longs and started to add more shorts? Why it's important to see this? Because the market currently is at the decision area for this market. From here, the market needs to decide. Since this is exactly the previous support to resistance, the pattern is completed. And here we have the resistance. Now, if this market wants to continue to the downside from here, it needs to reject the area and create an impulse, a correction, and an impulse pattern to the downside. On the other side, if it wants to break this area, this situation will be this one. We will have a break, and the market after the break will go to make a retest, and we will have the creation of this inverted head and shoulders. And the opportunity will be here for the continuation to the upside. So currently we have a market that is in the decision area. How can we understand if the market wants to break or if it wants to bounce? Well, the answer to this is very simple. Trading is reactive, not predictive. We can stack up all the odds to one side, but then inevitably the market can go to the other side, okay? Anything can change anytime in the market. That is why we have to be always adaptive and reactive to what the market is clearly showing us. So how we will be approaching this situation with students? First of all, we need to see what we will have with the new report. Second of all, it will be of key importance to monitor what will be going on inside of this area from a 4-hour perspective. Why? Because always remember, monthly, weekly, and daily are the best time frames for the direction of the market, but the best time frame for entry is the 4 hours. So on the 4 hours, we will have to monitor inside of this area what will be going on. If everything will be bullish, then this area will easily break to the upside. So the situation in which we have to approach this pair is very simple. Here, we have to be looking for a potential shorting opportunity until the market will be below this area if on the 4 hours we will see proper bearish price action, which at the moment we absolutely don't have. If everything will remain as it is right now on the 4 hours, this area will easily break to the upside. And if it will break to the upside, the next opportunity is after the market will retrace back inside of this zone, because as I said earlier, we will have the possibility to create the inverted head and shoulders. And with students inside of this area, that is where we will be monitoring price action, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside. But it is extremely important to understand what the market wants to do around this area. Now, at the moment, given the bullishness that the market currently has, it might seem most probable to see the break to the upside, which in that case would lead to the inverted head and shoulders. But let's not try to predict the market. Let's wait for the market to clearly show us what kind of pattern it wants to create. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, every day you get a new daily market breakdown showing you exactly how to apply these strategies with entry, stop, and take profit, as well as having me personally answering every single question that you have every day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the program.